Hey guys, what's up? I'm still traveling. As you can see, I'm not in my regular setup, even not in my kind of road trip vacation summer setup, just because I'm right now in Mobile, Alabama. Hey, if you are from Alabama, please shoot up a comment in the comment section below. So I will be reaching my final destination, which is Houston, Texas tomorrow. And I was down in Charleston, South Carolina, beautiful town. We had a blast. The wifey and the kids had a blast at the beach, and we were kind of on the road, traveling back again. So today we had a lot of rain in Mobile, so I had to use my phone and use the car as the setup to do my video. So quick update on markets, guys. Yesterday or today we received the PPI, and as I was kind of updating you on the preview for the markets this week, on Sunday I was talking about not focusing a lot on the CPI but focusing a lot more into the PPI. It's kind of the same thing, but the PPI is the index for price increase when it comes to the producers, the companies, the businesses, and the CPI, the consumer price index, is the index for the price increase or decrease for the consumers. Now, both of them were a lot more higher than expected, but the market tanked a lot in fears of the Federal Reserve going to react more aggressively than anticipated when it comes to fighting inflation. But what the market tends to forget, and it was really my thought when when the market opened up this morning, is this is way overreacted. Why? Because the Federal Reserve since the beginning of this year has been kind of late to the game. They've been blamed for being late to reacting, to responding on increasing interest rates when it comes to fighting inflation down. But right now, the CPI data that we are having right now, remember, it's 1 month lagging. It's always lagging 1 month behind. But for the month of July, you look at oil, you look at lumber, you look at cotton, you look at copper, you look at wheat, everything in terms of major commodities that we use in order to do, in order to move, like oil, in order to eat, when it comes to foods, wheat, cotton, you look at sugar, everything has been going down to pre-Ukraine invasion levels. Remember, everything went up to the sky, went up to the roof when Russia invaded Ukraine, and now we are going back to those levels as if war has ended, and the good thing on top of it is China is now reopening. It may not be full back to reopen yet, but they will not remain on lockdown forever. So signs of supply chain issues improving also help alleviate some pressures on inflation and prices rising. Now, I'm betting you guys that on the next CPI report we're gonna get in for the month of July, if things remain as they are right now, especially with oil, going back down, and the other major commodities going back down as well and staying down, I bet you that we're gonna have some major signs of inflation going down, and that's gonna be a huge catalyst for markets. That's going to be a huge headwind for the market, especially as the Federal Reserve comes out and say, hey guys, you know what? The market is expecting 100 basis points, but actually we're just going to do 0.5. So 50 basis points, 0.5%, or maybe 25 basis points, or maybe just let's do nothing. That will be the best case scenario for stocks to start, finding some sort of footing in order to, start running for the next bull market to come. Because this whole thing, around recession fears and inflation has a lot to do with the Federal Reserve as a central bank being hawkish, being aggressive, being really, tightening liquidity markets and the money supply. So if inflation is now showing signs of, hey, you know what, things may not be as worse, or things might start to cool off a lot. Like oil has been down almost 25% in the last 10 days, and you look at other major commodities, it's kind of the same thing. So I'm on the side of people thinking that the Federal Reserve is going to surprise, because they look at commodities, they look at all of these things in real time when whereas CPI data, the PPI numbers are coming 1 month, behind with a 1 month lag. So based on this, I'm definitely more bullish now. And my two major plays right now are definitely energy and cryptocurrencies. Crypto, I'm buying the BIF, I'm buying, the OBTC, the ETHE, that's a ticker symbol. For the trust, I'm also buying, a lot more of the miners, Mara, Riot, Bitfarm. I'm buying a lot of these because I do believe that now that we've seen crypto kind of trading, hand in hand with stocks, whenever stocks will go up, definitely crypto will also follow, especially if you look at, the price action around Bitcoin, Ethereum, and some of the other altcoins such as, Shiba Inu, Dogecoin, Voyager. All of these are kind of in stable mode right now, which is a good sign that, maybe the worst is behind us. So I'm sticking to it. Let's see how it unfolds.